Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPJPY, British Pound Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, Gold USD, GBP USD and many more. So let's get started. So this is the Forex chart of GBPJPY in front of us right now, and as we all know, GBPJPY is extremely bullish for the last couple of days. And if you have watched my previous videos on GBPJPY, then hopefully you have made good money, because we have been talking about the importance of this level for quite some time. And right now you can see that the current market price is far away from this level. Hopefully you all have made big fat profit from my analysis. But right now you can see that market is trading at 152.45 level. So let's try to understand what is going on in the chart of GBPJPY and what should be our trading strategy. So you can clearly see that it is trading above this trend line. So this trend line, okay, this trend line which was acting as a resistance for the market is no longer valid. And after that we had a small resistance or a temporary resistance at 151.75 level, and you can see that market has also broke the resistance with great volume. So market is going up. There doesn't seem to be any boundary right now, so things are very bullish for GBPJPY. Okay, so if we look at the present trend of the market here, then there should not be any doubt that this is a buyer's market, is a very bullish market. And as we all know, the basic rule, the thumb rule of the market is follow the trend. Follow the trend means if a market is an uptrend, we should mainly look for buying opportunities, and if a market is in downtrend, we should mainly look for selling opportunities. And as you can clearly see that GBPJPY is in strong uptrend, therefore we should mainly look for buying opportunities, because if you go for a shorting position or if you sell the market here, then there's a good possibility of losing money. And for example, this is the Forex sentiment meter. You'll find the Forex sentiment meter on my website avilashhazarika.com under Forex 101 section. So in the Forex sentiment meter, you can see that 84% retail traders have taken short position and only 15% retail traders have taken long position. So in this market, 84% retail traders have taken short position, and this is the main reason why 90% retail traders lose money, because retail traders fail to follow the trend of the market. In this bullish market, retail traders, 84% traders have taken short position and they are in loss right now. So what should be our trading strategy then? Trading strategy is simple. In this market condition, we will only look for buying position only, because if we go to weekly chart also, the weekly chart of GBPJPY, and if I remove the drawings, you can see that market has successfully taken support at 149.50 level and still going up. And if we just observe the market here, then it looks like a bullish flag pattern. So therefore there is no logic of taking short position here right now, because if you take a short position, it will be very risky, because we will be going against the trend of the market. We will be violating the first rule of the market, which is the trend. Therefore let's find out where we should be taking buy position. first of all First of all, the best buy position in this market will be if market comes down and takes support at 151.75 level here. If market comes and takes support at this particular level here, then definitely we can initiate a buy position. This is our first trading opportunity. Okay, if market consolidates and bounces from 151.75 level, and on the other hand, we can also take help of the Fibonacci levels, because in case of retracement, or when we need to find out the best buying opportunity, then Fibonacci levels, retracement levels comes handy. So 151.75 is the best position according to my analysis. And on the other hand, you can also take a buy position if market bounces from 152 level, because we have a retracement level at 152 as well, 23.6%. On the other hand, if market breaks the if market breaks the 151.75 level, then we have the next buying position at 151.50, which is the Fibonacci 38 point. Oh, sorry, this is the 50% retracement or what? No, this is the 38.2% retracement of Fibonacci. So first buying position is 152.50. Sorry, I've lost my mind. Sorry. So the first buying position, if market retraces, is 152 level. Second is 151.75, and the third is 151.50. These three are the buying position for you. Whenever you'll find market bouncing from any of these levels, you need to grab the market. That's it. And apart from the buying position, I will not recommend anything, because we also have a resistance. We also have a resistance at here at 152.75 level. But still, in a market condition like this, shorting the market at the resistance is also very risky, because the buying pressure is very high. If we just try to focus on the psychology of the market here, then shorting the market at the resistance will be risky. So do not short the market here. Do not short the market here. If market breaks out or goes above it, I'll be covering that part tomorrow. So bye bye, take care, see ya tomorrow again.